All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today I have an exciting video. We're going to be talking about two new Yieldmax ETFs. And within this video, basically, we're covering two new Yieldmax ETFs which follow the Dorsey Wright hybrid strategy. What I'll do in this video is I'll go over the strategy, what exactly it is. I'll go over these two new Yieldmax ETFs because they're not any Yieldmax ETFs. These are considered fund of funds like YMAX, like YMAG, FIVY, and FEAT. They're going to be holding 5 underlying Yieldmax and potentially individual stocks. And within this video, I'll kind of go through them both, with FIVY actually holding some of the underlying stock and FEAT only holding Yieldmax ETFs. Basically, what I want to do is I want to explain the Dorsey Wright strategy, what exactly this strategy is about. So if you are to buy either of these two ETFs, then you'll kind of understand that. As well, what I want to talk about is which one will be better for potentially price return and NAV erosion, and which one is likely to be better for income. I also have as well both of the weightings for the underlying stocks and ETFs for each of these two fund of funds for Yieldmax. So we're going to be going over all of that. This will be a complete overview of FEAT and FIVY. And hopefully I'll fill you in on everything you need to know about these two ETFs. And if that does sound good, if you're interested in Yieldmax videos and other videos with high yielding ETFs, we're currently up to 6,682 subscribers, 4,447 subscribers in the past 28 days. And as you guys know, of course, I share a lot about my own personal kind of wealth journey and just basically building my cash right now, building my positions, and FIVY and FEAT are two potential Yieldmax ETFs that I'm looking to buy. The reason being is because I hold a lot of YMAX, as you guys know. And these two ETFs are fund of funds, meaning that they're going to be a little bit more diversified than just individual Yieldmax ETFs. With all that being said, if you guys follow my channel, you will know that I do buy some individual Yieldmax ETFs like BABO, PYPY, SQY, and also Crash for the short on Tesla, but that's besides the point. Today we're talking about FIVY and FEAT. So let's start off with FIVY. FIVY is the Yieldmax Dorsey Wright Hybrid 5 income ETF. Basically, Hybrid 5 being they're going to hold 5 different underlying ETFs and stocks, and they're going to be basically collecting dividends and potential better kind of NAV erosion. Right here, what I want to, there's a paragraph here which completely kind of goes over what exactly FIVY does. The index selects for inclusion the 5 Yieldmax ETFs that correspond to the 5 underlying securities that rank highest according to the Dorsey Wright proprietary movement. Basically, the 5 Yieldmax ETFs out of all Yieldmax ETFs, which kind of correlate best to this Dorsey Wright movement, and I'll get to the Dorsey Wright movement in a second. But basically, there are usually a total of 10 components in the index, and at each monthly rebalance, basically being every single month, FIVY and FEAT are going to rebalance the stocks and ETFs within their kind of holdings. It says each Yieldmax ETF receives a 12% weight, and each underlying security receives an 8% weight. So for FIVY specifically, when we go to FIVY's holdings, you're going to see that they hold a mixture of both Yieldmax ETFs, for example, FBY right here, and they also hold the underlying stock, which is Meta. And they do this, I have all the Yieldmax weightings in kind of a yellow tint here. You can see all the Yieldmax weightings are roughly about 12% or so. It's going to depend based on how the price appreciates or depreciates. As you can see, Misty has gone down a little bit, so it's at 9% currently. But basically, the weighting is going to be starting at 12% for all Yieldmax ETFs, and then all underlying stocks. These are going to be the underlying stocks like Netflix, Nvidia, Tesla. They're all going to start at 8% and move respectively. So one of the benefits with this strategy, it says here, just before I mentioned, the results is a hybrid index with 60% exposure to Yieldmax ETFs and 40% exposure to the underlying securities of those Yieldmax ETFs. So 60% Yieldmax, 40% underlying securities. What does this mean? This means that you're going to be receiving dividends based off of 60% Yieldmax ETFs, and you're going to be receiving potentially a little bit better price appreciation off of 40% exposure to the underlying. One of the benefits of FIVY using both the Yieldmax and the underlying stock is you're likely to get better price appreciation because a Yieldmax ETF is capped to the upside, whereas the underlying stock, there's no cap. It's whatever the stock moves, that's what the price will appreciate to. So with FIVY, the funny part is actually FIVY is currently down a little bit more. Oh, you know what? Actually, okay, well, they're sitting about the same marker. So both FEAT and FIVY, they're going to hold the exact same stocks or ETFs, but FEAT will only hold Yieldmax ETFs. But as mentioned, FIVY has the advantage of they're not capped to the upside for 40% of their holdings, 40% of their stock holdings, whereas FEAT, on the other hand, could be seen as more of an income play because it's going to hold 100% Yieldmax ETFs. And when I go for FEAT, it says pretty much the same thing here. Let's see if it mentions the index selects same thing. The 5 Yieldmax ETFs that correspond to the 5 underlying securities that rank highest according to the Dorsey Wright's proprietary movement rating methodology. I don't like how they use such big words. I really wish they could dumb it down, but I guess that's why I'm making the video for this. So there are usually 5 components in the index and at each monthly rebalance. Once again, every month they're going to be rebalancing based off of Dorsey Wright kind of features. So each component is equally weighted. See holdings below for current components. Cool. So when we look below, I can show you if they have it here. Absolutely. So you see the Tesla option income strategy ETF, Meta, Netflix, Nvidia, MSTR. So those are going to be the 20% weighted Yieldmax ETFs. See FBY, all of them here. Basically, with one strategy, you're going to have 40% of the underlying stock, and the other one, you're going to have only Yieldmax ETFs. The one positive about having all Yieldmax ETFs is you're likely to receive a better monthly dividend and more monthly income from FEAT than from FIVY. But one thing with FEAT is you are potentially at risk for more downside if the stocks, the underlying stocks, Tesla, Meta, Nvidia, they rise fast. So what would you be looking to do? Would you be looking to buy FIVY or would you be looking to buy FEAT? I think it all depends on the underlying stocks and the Yieldmax ETFs. But where I would kind of help to make that decision is, do you think that the underlying stocks are going to run up, let's say, more than 15% in a month? Do you think that Nvidia, Tesla, MSTR are going to run up more than 15%? Because at about roughly 15%, these Yieldmax ETFs are capped. Whenever there's huge up days in these stocks, they're capped on the Yieldmax ETF, but the stock is not capped, meaning 40% is going to be, you're basically looking at 40% of the underlying holdings of FIVY are going to perform better than FEAT because FEAT holds all Yieldmax ETFs. So that's kind of your trade-off. Are you looking for more stable price potential? Because, nothing's really guaranteed, but potentially more stable NAV versus higher income. And another thing that we got to go over is the Dorsey Wright strategy. The Dorsey Wright strategy, to me, I found honestly Google kind of explained it best. It's basically a strategy where it seeks to actively rotate. This goes back to when Yieldmax is saying that they're going to be rebalancing every single month for their, I'm not sure where that's in here, but every single month, each monthly rebalance. Every single month, the strategy looks to actively rotate exposure across the credit markets and yield curve in response to the market environment. Cool. Awesome. I found, honestly, Google explained it the best. There's 4 things that kind of go into the Dorsey Wright strategy: relative strength matrix, sector ranking, and tactical tilt. That explains nothing to me. Relative strength basically goes off of the trends of the market, where FIVY is kind of in Tesla, which is very volatile at the moment, Nvidia very volatile, Meta, which is kind of in the AI sector. So it's based off of sector strength. You also have relative strength matrix, which is It says here, analyzes large numbers of charts and displays large data. In my interpretation of this, it's looking at the actual underlying stock charts of the 5 holdings, and then from there going, okay, we see some kind of price potential in those 5 holdings. That's what I believe the relative strength maintenance matrix is. Pardon me, I'm running off a couple hours of sleep. I'm doing my best here. And then we have the sector ranking. Dorsey Wright uses proprietary sector ranking and stock rotation methodology to construct portfolios. In my opinion for this, once again, just kind of go into, okay, what sector is booming right now? What sector is likely to produce kind of the highest price point or the highest return? Because every single month they are rebalancing. And then the last thing is tactical tilt. Dorsey Wright uses a rules-based methodology to pivot between wealth accumulation and wealth preservation strategies. In my kind of understanding of this, this is the basic Dorsey Wright strategy, where you hold 60% of, let's say, Yieldmax ETFs or some kind of high-paying, in this case, a high-paying dividend yield, and then 40% exposure to the underlying. This is kind of that wealth accumulation strategy and wealth preservation strategy, where you have both the high dividend yield for income, and then you also have 40% owning of the underlying in order to protect yourself on the NAV. So I hope I did an okay or good job explaining FIVY and then as well FEAT. These are 2 new Yieldmax ETFs. They are currently in the fund of funds category. They're going to hold a basket of different stocks, 5 stocks at a time, or 5 ETFs at a time, depending which ETF you're in, whether it's FIVY or FEAT. They go off the Dorsey Wright strategy, which basically, long story short, is Yieldmax thinks that these underlying stocks are going to move to the positive and they're going to have good appreciation in the short term. They have good volatility, and that's why they're looking to hold them. And in my opinion, these could be a potential addition to, let's say, a Yieldmax holding, as maybe it would produce a bit of a higher dividend yield just because it's going off of things like volatility and potential appreciation. And if Yieldmax is able to play it out well, then you could potentially have a really good ETF which performs very well and pays out super high dividends. But once again, when you're investing in FIVY and you're investing in FEAT, you're totally going off of basically how well do you think the Yieldmax, the people who are in control of making the decisions on what Yieldmax ETFs, how well are they going to do? Are they going to be able to choose the right 5 Yieldmax ETFs and right 5 stocks which are going to produce those returns or not? So that's kind of where you bank on them. What you could do is you could hold off for a little while and you could see, okay, is Yieldmax doing a good job choosing their underlying ETFs? What you can also do is you can look at their underlying holdings. These are the 5 holdings for the first month. You could say, do you believe FBY, MSTY, NFLY, NVDY, and TSLY? Do you think these 5 Yieldmax ETFs and their underlying stocks are going to appreciate? Do you think they're at high levels? Do you think they're at low levels? And you can kind of base your investment decision based off looking at the underlying. So there's a lot of different ways that you can look at it, but I think it's very interesting what they're trying to do here. Of course, Yieldmax is coming out with so many new ETFs, and pretty much every single day they're coming out with something different. So it's kind of nice to see. It gives many options, and of course, it brings you in awesome monthly dividends and awesome monthly income. So I hope you guys did enjoy this video. In terms of these 2 ETFs, I'd probably be looking to buy more FIVY, but it totally depends. Right now, I'm not huge on these underlying holdings that they have for these 2 ETFs, but once they change them and I think that there's better potential, then I'll look to buy in. But for right now, I'm not super certain that I'll be buying either FIVY or FEAT, but we'll go from there. So if this video did help, we're currently up to 6,682 subscribers. Click the subscribe button if you guys want to see more like this. Give this video a like if you guys enjoyed, and I hope you guys stick around to the next video and join me on my journey. It's been fun for now, but I'll catch you guys in the next video.